Hello, this is James Dewar, your host of the James Dewar Show and the 7 Steps to Financial Success. So today we want to talk about Step 6, and Step 6 is long-term care insurance. And that is a critical part of the James Dewar 7 Steps, because if you have an extended long-term care event, then there goes all the money for your remaining spouse. And I've talked to some really personal conversations with people who women live longer than men, so I've talked to a lot of widows that said, you know, if I didn't have a long-term care policy on my husband, then I would have lost everything. I would have lost the house. I would have lost everything that I had, because I would have had all the money went into long-term care for my husband. But because they take care of each other, they had long-term care policies on each spouse. So long-term care is Step 6 of the James Dewar 7 Steps to Financial Success, and it's a critical one. And you need to have a portion of it. I mean, some of it you may want to pay, you know, you may have money built up, but you always want to leverage your money first. But the second thing is you always want to have something that's, you know, kind of like guaranteed by a large financial company that's secure, and we have those companies that offer long-term care insurance. And one thing about long-term care insurance, it can increase in premiums over life. Okay, listen to this. A lot of people won't tell you this. If you get a long-term care insurance policy, the premiums may increase. So that's why not all long-term care policies are created equal. And that's why we're only going to refer you to companies who have maybe only had one increase over the last, since the beginning. So you need to go with a company that has a financial wherewithal, that they're not going to raise your premiums when you retire. So we know those companies. I want you to reach out to us, reach out to me. Go to money, M-O-N-E-Y, at jamesdewar.com. That's JAMESDUERR.com. Or go to our website, jamesdewar.com, and send us an email. So the long-term care, let's talk a little bit about long-term care. Who is going to take care of you if you have a long-term care event? Do you want your spouse to take care of you? Do you want your children to take care of you? Do you want to be a caregiver, or do you want to be a caregiver manager? So that's what happens when you get long-term care insurance, is you become the caregiver manager, not the caregiver. And I can tell you, both my parents and my spouse's parents, they went through events in life that the spouse would have to take care of the other spouse, and both of them end up with heart attacks. The other spouse, the one taking care of them, because it's so stressful to provide long-term care to a spouse. So you need to have somebody helping you. That's why you get long-term care insurance, because you want to be the caregiver manager, not the caregiver. You can give your spouse more love by being the manager and not the caregiver. So what qualifies for a long-term care event? So you have the activities of daily living, like dressing yourself, feeding yourself, getting out of bed, toileting, incontinence, things like that, these are daily activities of life. And those are what triggers long-term care. So a lot of people don't know about that. These things are triggering events, and then they have to be verified by a physician that you can't perform 2 or more of these activities. And then you would most likely qualify for long-term care benefits. And this means that if you get in a car wreck and you're temporarily disabled for 6 months, long-term care would pay for that. So it's not only for your later years, you should get it now. And when to apply. So you should apply for long-term care in your 50s, in your 40s, in your late 30s. Why? Because then you can lock into a low premium. And then if you wait till you're 65, many people have a lot of medications, they have illnesses, they have, using a cane. There's a lot of things that can disqualify you for long-term care, and that you wouldn't think would. It's much harder to get long-term care insurance than it is to get regular insurance. So the takeaway is apply for long-term care when you're young and healthy, and it's going to be cheaper for you, and also you're going to be most likely to get approved. Because in my experience, if people wait for their 60s, 50% either gets disqualified or the long-term care is so expensive they can't afford it. So call us today. Go to the jamesduer.com website. That's JAMESDUERR.com, and we'll sit down with you and have the discussion about long-term care insurance. Another couple quick things. If you don't like the idea of paying premium every month, and you have some cash set aside, or if you have cash you can put out like for a period of 5 years or 10 years, you can do another type of long-term care that's not tax qualified, but it will provide you a death benefit if you die. So if you die, you get a benefit. If you live and get long-term care, you get long-term care insurance. And if you decide 10 years, 20 years down the line, you don't want to do it anymore, you get all your money back. So that's what I call a diversified long-term care, non-qualified. So you need to know about both of those. Not a lot of people teach that. We teach that here at the James Duer Show because we want you to be financially successful. So until next time, this is James Duer, your host of the James Duer Show and the 7 Steps to Financial Success.